If you clicked on this video, my guess is that you're one of the investors the title mentions. Somebody that started investing around the time COVID happened. And I'm here to tell you that what you have experienced these last couple of years is not normal. And in this video, I will break down and show why that is and what you can take from the experience looking forward. And in the end of the video, I will share where I think we are at the beginning of a new stage or a new time where it's really, really good for people to start investing. And I will also share how I'm investing as a consequence of that belief. So stick around and I will explain everything. But before that, I will just share a quick time lapse of what has happened since the beginning of 2020 until today. So a quick time lapse of what has happened since the beginning of 2020 until today. It's just good to refresh the memory because, yes, a lot has happened during these last couple of years. In the beginning of 2020, more and more news come out about this new virus from China, and people start speculating of what kind of effect this will have on countries. The following weeks, one country after another chooses to do a lockdown or take other measures to ensure that the virus doesn't spread too rapidly. As a consequence of these measures, the stock market starts to crash and at a rate faster than anyone could have predicted. Just in one day alone, the 16th of March 2020, the S&P 500 plummeted and lost 13% of its value. To save the economy and the stock market as well, the Federal Reserve started to lower their Fed rate, so it went down to zero, and at the same time they started to buy different securities. This is called quantitative easing. The effect was that the stock market made its fastest recovery, and only in a couple of months, the stock market was trading at higher levels than it was before the crash. This quickly escalated, and stocks were trading at higher and higher multiples. Stocks like Tesla, Shopify, Neo, GameStop, and in cryptocurrencies like Bitcoin, Ethereum, and Dogecoin all went to the moon, as they said. It looked as if you couldn't lose money. Everything you put your money in just exploded, but then reality caught up. As a consequence of all the quantitative easing, inflation started to increase, and it just continued until to the point where it was at levels not seen since the 80s. So as a consequence, the Fed in March 2022 decided to do quantitative tightening to push down inflation. The Fed did this by increasing the Fed rate, and they also started selling all the securities they had accumulated during the previous years. This led the bubble to crash, and all the high-flying stocks went back to earth. This leads us till today. So the Fed right now is still trying to decrease the inflation to their goal of 2% per year, and by the looks of it, they are quite successful. But this, of course, also has other consequences. The last 3 years have been an absolutely strange place to be as an investor. From the flash crash of 2020 to highly speculative stocks taking over the investing community to a high inflation environment. It's all just been a big, beautiful mess, so to speak. All this to say that what you have experienced as a new investor is not part of the normal investing cycle. So what can you expect from the future, and what does a normal investing cycle look like? Well, in a way, you've already experienced it. It's just that you did it in 3 years instead of 10 to 15 years. The overarching story is just that economies go from busts to booms, and the Federal Reserve tries to get inflation to 2%. If the economy gets too hot, meaning high employment, high inflation, etc., well, then the Fed comes in and they start increasing the Federal Reserve rate. And if the opposite happens, if the economy gets too cold, so to speak, well, then the Federal Reserve does the opposite. It's just that these swings back and forth don't usually happen in a period of 2 years. So I think the Fed right now will keep the rates high to battle inflation, and they've said themselves that they don't want to flip-flop, but they want to be sure that inflation goes down to the level they're aiming for. But this is great for us investors, and I will tell you why. If the Fed rate continues to be high, that means that stocks will trade at lower multiples. And that means that we, the investors, can pick up stocks like great companies for fair prices or even great prices. And when the Fed starts to lower the Fed rate again, when they're done with battling inflation, well, then the stocks we have accumulated during all these years will go up as a consequence. Not just because the businesses we own have performed well, but because when the Fed lowers the rate, we get this financial tailwind that helps the prices to go up. So this is why I think the real money is to be made in the coming years. But my suspicion is that a lot of the new investors got a bit turned off by seeing all the chaos in the markets these last couple of years, and that they have become fearful. And as a consequence of this, they will miss this huge opportunity that lies ahead. And nobody knows what lies ahead. I can't be sure of what will happen in the future. But if history has something to tell, then it is that the stock market historically has been one of the best places for people to invest their money. So how am I investing? Well, it's very simple. I look for good or even sometimes great companies, and if their stock price is under their intrinsic value, I buy them. I will make a video in the future explaining how you can find great stocks to buy, but right now I can just mention shortly that how I find great stocks most of the times is that I have a community of people and they come up with these stocks ideas. So I listen to them, so it's word of mouth, so to speak, and then I analyze for myself these companies. And if I find that, well, these are great bargains, these are great companies trading at fair or even great prices, well, then I buy. But if finding stocks for yourself and putting in all the hours into research that is necessary to make an informed decision on whether you should buy the stock or not doesn't sound appealing to you, well, you're probably best off just dollar cost averaging every month into an index fund. This investing method is one of the simplest way to begin, and it has on average given a return of around 8% per year. So don't be afraid if you're a new investor, because I have the sense that a lot of people now that are new investors are gonna look back in 5 or 10 years time and ask themselves, why didn't I invest more when prices were so low? Remember Warren Buffett's overused quote, "Be fearful when others are greedy and be greedy when others are fearful." If you like this video, make sure to subscribe down low, and I will see you in the next one.